Hello everybody, good morning and welcome to the European Session Brief. We're on Thursday the 20th of April 2023. Let's take a look at some of the market headlines coming across my desk this morning, then we'll head into how markets are shaping up for the session ahead. In France, French President Emmanuel Macron's push to enlist China's help to sketch out parameters for possible talks between Russia and Ukraine has drawn criticism from some allies who think that such an effort is premature and fear it could undermine European unity. Macron's strategy, which envisaged a framework for talks between Moscow and Kiev as soon as this summer, if all goes well, may muddy the water regarding Ukraine's demand that Russia relinquishes all Ukrainian territory. The US economy stalled in recent weeks with hiring and inflation slowing and access to credit narrowing, the Fed said in its Beige Book survey of regional business contacts that got released yesterday. It may add to concerns that the economy is slipping into recession and likely reinforces the chances that Fed policymakers will pause their run of interest rate hikes following an expected quarter point increase at the next gathering in May. Meanwhile, Fed President from New York, John Williams, said that the recent stress may make it more challenging for households and businesses to access credit. Meta Platforms, the parent of Facebook, of course, is planning to cut or relocate its London-based Instagram employees. The London office became a centre for growth for the social media app when its leader moved there temporarily last year, but he's planning to relocate to the US. Elon Musk signaled Tesla will continue to cut prices to stoke demand for electric vehicles, even at the expense of its industry-leading profit margins. Musk argued he has good reasons for doing so, saying yesterday that Tesla can financially withstand price cuts, giving it the upper hand against rivals. The price drops have been quite dramatic. The base price for Model 3 has now dipped below $40,000 in the US, $40,000 for the first time in years. That's a roughly $7,000 cut from the start of the year. Investors aren't so sure on Musk's words there, and it did send the stock lower in aftermarket trading. So we'll look ahead. We've got a relatively tepid start by European equities on the outlook of interest rates and corporate earnings continues. The ECB is issuing a report on its March policy meeting today. Expected data includes Spain's trade balance, France's business confidence, and PPI inflation for Germany and Portugal. There's a deluge of earnings ahead as well in Europe. Volvo, Sartorius, Stedman, Biotech, and Nokia among the companies to report. That's where we're at today. Yesterday we saw the cable rise against the dollar slightly, and it has done so far this week. Potential hope for renaissance for Great Britain, but persistently high inflation, as we discussed on this brief yesterday morning, a sputtering house market and public sector strikes are putting that idea to bed. We've got the inflation that came out yesterday in double digits in March. I just posted inside the news chat here that UK Chancellor of the Exchequer, Jeremy Hunt, has denied the UK has an inflation problem. But if you look at the UK compared to G7 nations or the G7 nations, you can see why some may want to disagree with that. House prices, sales of London new homes in the first quarter slumped by 39% compared to a year earlier. Faced with a cost of living crisis, perceptions of their own shrinking wealth, doctors and other workers may well feel justified in digging their heels for higher wages, which then feeds back into inflation, which then forces the Bank of England into some action. In terms of asset prices, it's a continuation for the UK as well. UK stocks are less rate sensitive than the long duration tech companies that dominate US indices. That's obviously a reason why the FTSE has been able to trade at all-time highs or is back near all-time highs right now. They're also very global in focus, bringing shelter for investors worried about the state of the local economy. A firmer pound, though, will be a headwind for stocks earning the bulk of their top line from international sales, though would be the reason for that. And with inflation topping that of its peers, only Sweden in the G10 had a high year-on-year CPI reading. Pressure from the BOE may well make the currency strength the dominant theme in the UK in the coming months. Speaking about currency strength from a technical perspective, obviously we've got above that double top high from the end of the year, early this year. Obviously we've just got stuck again around 125.25. So There's still a lot of upside for this market if it can crack through this particular region here. I did mention that I wasn't really seeing the strength in the cable enough to see that push through, but I was wrong to get that initial break, albeit we are just trading back below it now. DAX 15921, we've got a few higher lows been put in quite consistently now in this market, especially this week. We're now on Thursday, so you've had the 1, the 2, the 3. You can see every low being above the previous one. So now it's a case of, can we be able to build on this and use this pressure to the upside to force a move through 15975, which is my next overhead level. FTSE completely flat on the week, and the euro is pretty mixed and quite choppy, in fact, overall this week. There's not too much else for me to add there. That's the news, that's the markets, that's the European session brief done. I will see you all inside the chat room, and thank everybody for listening. Take care and bye for now.